The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour for this 28th day of September. My pleasure to be here. Thank you to all the hosts. Good to have John Logan back. Yes, sirree. So we had John, we had Larry, we had Tom. Fabulous shows, and I hope I can present something that is of interest to you. Most importantly, we're looking at a Dow that was down about 190. Now it's down 130. S&P's down 20. And so Dow's at 16,182. Hasn't broken the 16,000 level yet. I believe it will very soon. 1910 is the S&P. Comp index is, let me just move this away. Comp index is now down 61 at 4624. Of course, a lot of that has to do with the IBB. We can talk about that in a moment. But, you know, when a sector becomes the unfavorite, being the favorite for years and years and years, becomes the unfavorite, every opportunity is to get out. And that's what you look at. Every bounce, get out. Every rally, get out. Every open, down, close, get out. At a certain point, we're going to have a pretty good rally there, but let's just move on here. We've got, as I say, the comp index was down. The VIX is now at 25.44. It's up $1.82. In that mid-20s, you just got to watch out. I believe that we can now use the barometer by saying underneath 20, you'll get some kind of rally. But in the 20s, you got to watch out. Trin is at 137, and you've got something that's very interesting to me, is that within the context of looking at the market pull back, I was expecting last night to see gold start moving up instead of start moving down. It was down sharp earlier on. The GLD is trading at 108.54, down $1.20. And gold itself, let's see, let's just do the gold right now. GC, gold is down. Oops, let me move that away. Yeah, gold is down 11. It was down much more before, but basically it's in this sideways trading pattern. Let's look at the dollar here. The dollar is DXY. Is running a little bit before. Yeah, now it's pulling back, 96.16. You know, I think it's more about the market needing a real good timeout more than anything else. That must be your focus. See to subscribers this morning, lighten up a little more. We've been lightening up earlier in the year. I said lighten up a little more. If the market goes screaming to the upside, you've got your core positions on the long side. But if it breaks down, you want money to be able to buy back later. You don't just sit there watching it saying, oh, I knew the Dow was going to go down, but I didn't get out. That doesn't make sense. So gold right now, let me move this one away as well. Gold's down 11 at 11.33. Silver's down 13 cents at 96.14. I'm going to suggest something here. Oh, why did I do that? All right, doesn't matter. Bonds. Bonds are up now. This is going to be very interesting. Look at this chart here. I got too many charts. I wanted to do a number of things, and I had them up. I should have just, there we are, moved them away. Look at this. The TLT, which is the Lehman 20-year T-bond fund, is trading up $1.32 to 122.86. Very good action. You've got a peak A. You remember the Chapman wave? What did we look for? We look for the lowest, most obvious, identifiable low bar, and we merely start a wave count after that. Each successively higher peak gets labeled alphabetically to the upside. Let me just put this in here. Alphabetically to the upside with capital letters, that is, and downside lowercase letters, so you know exactly at a glance whether you're in an uptrend or a downtrend. So this is peak C right here on the 24th of September at 123.68. We're trading at 122.92. We have to see the TLT go to 123.69 to start leg D. Interestingly enough, What's really important about this, let me just move this one away, is that the monthly chart has got a very big cup formation that broke out in a Chapman wave cup and ladle formation in an exact time prime match from the high that was made back in July of 2012 to the low that was made December of 2013 to the breakout above the 132.21 high of 2012 into the 138.50 area. Now look what's going on. You got a cup formation with a handle formation. Not one of my favorite patterns, but you want to identify it. Now, I say not one of my favorite patterns. A pattern is a pattern. It doesn't care whether it is a favorite or an unfavorite. The fact is you've got to identify it. The reason why I say it's one of my least favorite is that in trading it, you have to be in early. You have to start making your decisions in the handle formation, suggesting that you could go to the cup. Now, it isn't a pure cup and handle because it broke out decisively in that leg D. It is a Chapman wave cup and ladle, which takes you to a D and then retests inside the cup, which is exactly what it's doing. So this says that you need to see the TLT take out the 128.92 level of last week, and it needs to take it out in such a way that the MACD, instead of flattening out, becomes a positive for an M-shaped pattern, and the stochastic, instead of being at 38%, which is kind of neutral to negative, should be at the 46, 48 area. Okay, that's just making it real simple. Monthly chart, you see. So that's the TLT. If I go to the at US, the continuous contract of the 30-year Treasury bonds, that's a little different because leg D broke above that peak E from way back in July of 2012, and pulled back, held the 9-period moving average, and then went to an E. And the stochastic and MACD are pretty much the same as you saw before. The difference is that it's trading with another 2 days to go, 2.5 days to go, is trading above the 9-period moving average at this particular point. Now you can see that I had a question the other day. The question was in the den on Friday, Technical Friday, whether the monthly was in a bear market. What I'd said was, no, that is the monthly Dow and S&P, etc. Were they in bear market? Is this a bear market? And the answer is that on a purely technical basis, I had no choice but to put in a down arrow at peak G in the Dow. It actually turns out in the Dow diamonds to be a peak E, perfect, with a doji, two dojis, a silent doji, and then a doji candle. And that says to me, this Chapman wave Roman candle that we're looking at from last month, this is really important. That's number one. Number two is the MACD and stochastic are so poor, so weak, and the unbalanced volume and the relative strength. I feel totally confident that that down arrow is correct and that we're in a very serious sell mode. So the answer is yes, but it's not even that. Every single day for weeks now, what have we seen? We've seen rallies that spiral up, sometimes 400 points, close down or sharply lower from the high. That's bear market material. We see the volatility index still in the 20s. It's actually 25 right now, and that's a negative. And what we're also looking at is that the characteristic of selling towards the end of the day, as opposed to the buying that we saw for years in that 6-year bull market, that selling pressure is reminiscent of what we saw back in April, May of 2012, was it? Let me just double check here. 2011. And now the patterns we are looking at are almost as if you've got a macrocosm. In other words, you've got the fractal, the pattern forming before, enlarged. Now, I'll go back to the Dow and I'll go back to the S&P and I'll show you something. Dow, INDUR, okay, there you are. This Chapman wave Roman candle, if the Dow starts to trade underneath 1600 for 2 out of 3 sessions and close at least 2 out of those sessions below 1600, that Roman candle, although it's a monthly candle, kicks in and it bypasses the weekly because the weekly should test the left side low of 15,855 very quickly. That was from October. But remember, our August 24th low was 15,370. That was 500 points lower, almost 500 points lower. So my suggestion here is that any rally is a really good opportunity to lighten up in your positions, on any of your long positions that you've had as buy and hold positions. This is just, you really have to be careful. Okay. Now I've got that out the way. So yes, this is all bear market material. Other thing is that the bonds are rallying and the VIX is rallying. So that all ties in. And on a very short-term basis, absolutely, you've got a little bounce coming. I drew this in over here. Did I draw it in over here? No, not on this one. What happened on this one? On this one. There we go. I drew it in. There's a little bounce coming, and we've already hit the first level of resistance. But I just think it's bounces, and until you really get something, you know, when I did the charts this weekend, I sent out so many to my subscribers, and I discussed that we were looking at the big picture, and then this morning I made a recommendation. But the other thing is, looking out, the semiconductors, the biotechs, the healthcare, just sector after sector was extremely weak. And I'll look at it now, the only sector that showed some strength, and there was a reason for that, was this leg F, possibly a peak F in the daily, weekly, and a G in the monthly of AutoZone. AZO is 746 down 7, only 7 right now. And AAP, which is a little different chart, that's just standing still at 176.19 in a sell mode already in the daily and weekly. And monthly, I haven't yet got any evidence of a sell mode. And Orly made a peak C1, C2 potential double top, peak F in the weekly, G/C in the monthly. This is going to be very interesting. How do these superb charts change the monthly charts, change the character over the coming 3 weeks, 2 weeks, I'd even say. It doesn't have to be 3. And all that I can say is that each one, if they fall over 2 weeks more than 8%, they have finally made their top. So this is going to be one of the final sectors. Now let's go to something. We've got Scott in Safety Harbor. Scott, how are you?
Very good. I mean, I'm not happy for the people that are, in a bad spot, but I mean, for me, Gilead going down to 96 something today was just, I got in at 96.70, and I'm just, happy as a pig in mud right now.
Oh, happy as a pig in mud?
Yeah.
Okay. Are you still holding the position?
Oh, absolutely. Are you kidding me?
Oh, wait, you're long?
Oh, long as about a week. It'll be up to 105, 106 in a week, but I want to see what the charts say.
Okay, we'll be back very soon. We're straight after this break with Scott in Safety Harbor. We need to look at this Gilead because we're not in agreement here. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and we're back with Scott and Safety Harbor. So, Scott, this is what I'm looking at. There are a couple of things that are going on with Gilead. Now, if the biotechs in general turn around a little later on, they could help the QQQ series and the IWM. I show my subscribers the IWM, which is the Russell 2000. A lot of biotechs in there, and IWM is getting hammered. In fact, the IWM and the New York Stock Exchange have very similar charts, and they are not good-looking charts. So here's what I'm looking at. If it's going to happen, it's got to happen within, because the arch formation in the 120-minute chart that had a low of 100.55 at 11:30 on the 4th of September went all the way to a peak F that was above the 200-period moving average. It went to 113.31. It's come back down and never really had time to do the left side, right side price time match, but it broke it, and the bar that broke the low of 100.55, that was the bar at 3:30 in the afternoon on the 25th. It wasn't able to bounce and close back above that 135 level. Instead, it closed lower, had one extra little bar at the close on Friday, and that was below the 9 EMA. And then today went sharply lower. This is the bar that, this is the maximum you can go in my work on these arch formations. And what happens at the left side low bar? If I would say by 2:20 this afternoon, so you've got 3 hours. In 3 hours time, if instead of being at 96.90, the GIL, Gilead Sciences, trading at 96.87 down 327, can break above from the low, can start to bounce back. It really needs to get to, I would say 97 to the 97.80s. It's got to be about a point higher at that time. If it does that, then I think there's a real good chance that it could test the high by, if the market, instead of closing down, the Dow closes down 180 points or more today. If it suddenly has a rally and spirals back to minus 60 or minus 50, absolutely, then I think you've got your trade. But what I'm really looking at here is that the way it broke, I can just give you this information that over the next week, if Gilead starts to trade under $92.50, that's going to impact the daily, immediately the weekly with the Roman candle, and then the Roman candle of last month would say, you might get a little bit of a bounce. I know that you're not in for that long a period, but there's a real good chance that if it starts to close under the 92.50 area, at some point within the next 6 to 8 sessions, Gilead will be trading closer to that round number low that it made at 86 on the 24th of August. So I'm just saying that I don't see it. And there's another technique that I use as well. I don't know if you can see the chart, but this is where you use the Chapman wave projections. And those projections had 98.60s as very strong support. It just smashed through it. 96.90 was the next one in the daily, and the monthly has 96. The weekly has 96.66. And I don't have anything in the 120-minute chart. I have a lot that were of support levels that were broken. So this is a tough one for me. I usually agree with you that on that shorter-term frame that you're looking at, I could see it. So unless there's a turn, and really you don't have more than about 3 hours, three and a half hours to see that turn in the general market.
I agree. We've got to have an upswing by 5 o'clock. Let's switch gears for a minute. I want to tell you that you were right about Alcoa. I spoke to you. I was in it at the 9:42. Had a chance to take a huge profit at the 10:10, and a streak of greed came through me. I did not take it at the 10:10. Managed to grab it back at the 9:60, but it went, at the 8.99 last week, and missed that. But with all, what is your opinion on charts when you have dramatic news like this, the split and everything that's happening today with Alcoa? Do you think it kind of recalibrates the charts?
Oh, what kind of split is going on with Alcoa?
I mean, it's just. I mean, you have to read all the news. It's just they're going into separating into two different companies and so forth.
I read about that.
Yeah.
I forgot completely about it because I'm so busy with the chart. The reason why I'm groaning and moaning is it means that I have to redo my Alcoa chart again. Oh, no.
So in actuality, when something dramatic happens, then you redo the charts.
Well, because my notation gets changed.
Right.
In fact, I have charts that still have the notation. I wonder if I've got the Apple chart in front of me here.
Well, and interestingly enough, the Alcoa is strong today. I'd like to hold on if possible.
Right, you know what? I'd like a little time to look at this. Hold on. Can you hold through the break?
Yes, absolutely.
Yeah, I'd like to look at Alcoa because a couple of things I wanted to discuss. So, okay, folks, we're looking at Alcoa. AA is the symbol. It's up 41 at 9.47. We're on with Scott in Safety Harbor. We'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. And yeah, I checked it out. And the story is that Alcoa is going to be, on Monday, intends to split into 2 separate companies, breaking off its downstream manufacturing assets after spending nearly $5 billion to build that finished product business. And yeah, so, okay. So that's the story there. Now, we'll only know this by tomorrow, probably, whether the chart, which is trading at 948, suddenly reverts to something like $7.20 because it's split. I don't know. We'll know tomorrow. But as a chart pattern, if you're looking at the charts that I'm looking at, Scott, this massive move from the 1775 back in November, the week of November the 24th, how can that be of 2015? November.
So you think it's going to go down in price now?
Give me a second. Oh, it was 14. Yeah, just give me a second. No, what I'm saying is, what happens if it splits off, then it depends on how they do this whole thing. But very often what happens is you get your core company and stays as the symbol, and then you get another company. I'm trying to think. Mondelez was the other one. I think, did that come from Kraft? Well, anyway, Mondelez is the one that I was thinking of.
Is all the things that you're talking about and these fundamental things that you learn in stock school and so forth, it's just so crazy nowadays because, you know, when this happens, that happens. But now it seems almost like it's just the way the traders digest things.
Well, actually, Scott, it's always been the way the traders digest things. What's happened now is that there's a little bit more highlight because you get so much news, but it was there. I mean, I used to see this often. I'm just trying to think back in the there was a company called I think it was General Foods. There were three generals in the Dow at one point back in the early 1980s. General Motors, General Electric, and I think it was General Foods. And that got taken over, and it did a whole, it was not unsimilar. It's always been the same. It's just that the news comes out so quickly and it becomes out so vociferously that people talk about it and it's mentioned and it becomes the highlight of the news. But in reality, the chart pattern, nothing really changed. If you're looking at this chart pattern of the weekly, massive move down from the November of 2014 1775 high to the 797 low that was made. That's a 2/3 drop. All of a sudden, it comes back. Oh, thank you, Larry. It was, I think maybe General Mills. General Mills, but General Mills is not in the Dow anymore. Anyway, we'll get back to that in a second. You've got an arch formation here, and that arch formation is suggesting that in the next 2, maybe 3 weeks, if the low of 886 is not taken out, the low of last week, but in fact it closes above the 9-period moving average of 983, there's a good chance you can get a leg B, and that would say that Alcoa has been under tremendous selling pressure, and this is like a relief bounce. It's so oversold, there aren't that many more sellers anymore. But if it splits, I have to look at it as a different company because it's lost one of its arms, and it has to regenerate the strength to say, now that I'm this other company, the financials are either superior or worse or whatever it is, but the chart will say. So I'm looking at this and I'm saying probably I'm going to have to renotate the whole of Alcoa.
There was an article that came out about Gilead, which I think really explains the whole stock market today. It says, does anybody care that about the fundamentals and the biotechs that are up? I mean, no one seems to even care. I mean, the biotechs are plunging, but Gilead, if you look at the articles, I can pull up 25 articles in a row about the just tremendous profits they're making lately in HIV, hepatitis, all the kind of stuff.
You see, Scott, now that's going to be very important. Now, you and I are going to look at this constantly over the coming few weeks, and I'll tell you months, actually. I'll tell you why. What is in the news now that is related to these biotech stocks has got nothing to do with what could happen politically and what could happen in the financials based on what would be the appropriate term, based upon a dynamic that has changed. And the dynamic that has changed is that before it was like open territory, whatever they wanted to charge, they could charge. Now, all of a sudden, there's a scrutiny, there's political scrutiny. When you get into the politics of anything, forget about it, because all of a sudden, that's why I've always avoided companies that are under any legal ramifications, because, boy, when the Fed or whatever department it is comes at you, they have the resources to pull. If they need 60 people for one tiny little thing, they've got 60 people. They just bring them in, and the government's paying for it. No problem. The money's not an issue. So that's going to happen now to the biotechs. That's what I'm concerned about.
Exactly.
So that's a difference, you see.
A CEO, I can't remember who it was, but I really liked the guy. I can't remember which company. Anyway, he said, all these CEOs come out here and they're all polished up. They look like movie stars, and they spend millions on television commercials for companies that have nothing to do with the public. They're just trying to be popular with the public. He says, I'm trying to run my company. I'm worried about my company, not the stock price.
You're talking about the head of Gilead Sciences?
No, I don't remember which CEO it was, but it was just nice to hear that from a CEO.
Right.
And that's the way it
I've listened to the head of most of these biotechs. I haven't been listening for months now to any of those interviews and stuff, because I just shut the TV off and it's gone. It's done. I've just don't need it during the day. But what's really important is that when I did hear them, many of them were extremely articulate, and
right.
The veracity was there. But when the tide changes, it doesn't matter. The thing is, if you recognize that the tide has changed, then what you're doing is grabbing short-term trades and getting out after a day or two or even a few hours. To me, that's, at this particular point, that's the way to trade the upside in most of these areas. The downside is a bigger position. Now, if you said to me that I went short Gilead at the high today at the open of 99.06, I would say to you, great. because now all you need to do is lower your buy stop, or you can keep taking profits. But if you actually hold it and it goes against you, within a week, it'll be below the price that you shorted at because the tide is going down. Remember, if the tide's going down, lower lows and lower highs for the majority of stocks. If the tide is going up, look at this chart here, the monthly chart. When it was going up, you could have used Fibonacci. You could have used whatever it is, hot dogs. I don't care what you use as a technique. Right. Everything was going up, and it didn't matter because you were always right. So that's really the big issue here is I'm trying to get across. The tide has changed. Be careful, but I think
everything needs
you know
to
how
be
to handle that.
You know, we were having a little get-together of day traders last Friday, and the persons, there's about 5 of us sitting there. We had a couple of pizzas and all our computers going and talking and so forth. And the man has a Rottweiler, about 9 months old, and there was a couple pepperoni pizzas sitting there. And the next thing we know, that Rottweiler had grabbed that piece of pepperoni pizza. I mean, this one, boom, just snapped it off the table. And I said, everybody, right there is how we should trade.
Yeah, that was a metaphor. I love it. I think that's great. Hey, thanks so much for calling, Scott. I hope your metaphor is going to work now with Gilead.
Just be happy with that piece that you got and go over in the corner and enjoy it.
That's it. Okay. Thank you for calling.
Thank you.
That was Scott in Safety Harbor. We were discussing Gilead and some of the biofarms. Yep. And the tide. We're discussing the tide here. So let's just go back to this. I wanted to show you something. See Gilead's chart? See this arch formation? Look at this. I'm going to grab, if I can. There's another one now. Look, the XLV. The XLV was the darling of Wall Street. S&P Select Healthcare Spider Fund. Now, I love this. Look, think of the politics. When everyone thought politically that healthcare was just the most terrible, oh, hell, don't even touch healthcare. Look what happened. You got Obamacare, you got all the stuff going on, and the biotech, the healthcare S&P Select Spider Fund closed above the 9-period moving average back in January of 2012, and not once up until last month did it close below. Now, that's the thing. This is the thinking that I have here, that it's going to be so interesting that under President Obama, that the first president, not the first, I'd say that is one of the few presidents that I can recall never having discussed the stock market if it was moving higher as being a big positive. And yet, under President Obama, the stock market has gone up over threefold. The S&P has from 666 up to that 21-something level. And that's the irony of what happens. And that's the reason. Remember when I showed that chart? I can't do it right now. They showed the chart of 1932 low. And I kept talking about it. I used to say, would you buy this chart here? Would you buy this chart here? It looked something like this. Going up to that 1937 and then 1938, the highs. If you were reading the New York Times every day, you wouldn't have bought anything until 1952 or something, when the Empire State Building made its first penny. You would not have done that because the news was so depressing, and rightly so, but it was not. You've got to look at the stock market as stock market. It is made up of human emotion, and that price movement is telling you which way the direction's going. It isn't the technicals. It isn't the unbalanced volume. It is the price itself is moving high. You remember sometimes I say, look at this. The price keeps going higher in the XLV weekly, but look how terrible the MACD is, and the stochastic's under 80%. And then all of a sudden what happens? It catches up to you. Bam, it goes from 77.40 with a Chapman wave 2-bar reversal, 77.40 to 76.93. And that goes on from July, and then whoosh, you get those sudden down moves. In this case, that tsunami that took the price down to 56.63. So all I'm saying is that when the tide changes, you can use any techniques you want. The most important technique to remember is that the market is going down. That's all. And then for timing purposes, you can use all your other techniques. They're valid. But that's the most important thing. And it's in the den. Market up and up, economy nowhere. Yeah, that's right, Terry. So the market is going up. And the economy, based on jobs, etc., is doing poorly. But the number of the economy, 2.3, 2.5%, that's not a bad number. It's just not what you'd be expecting after 6.25 years, number one. Number two is, in this particular instance, Peaky and the Den says, Obama should get credit for not taking credit for stock market boost. Well, that's just his métier. That's just, that's the aura that he has, that he's not interested. I don't think he is interested really in the stock market per se. He's interested in many other issues, and that's what he deals with. Now, stepping aside for a moment, looking at the charts, look at this 10-minute chart here. See how it's trying to form a base? It's made that little doji candle right there. This is the 10-minute E-minis, December E-minis. See the way stochastic has just made, you see that on the left side, that arch formation that made a higher right shoulder, and you got that bounce, but it was only a bounce. And then the MACD deflected lower, and then it tried to have a bigger bounce. Everything, if I was just looking at the technicals, I would have thought, wow, the E-minis had a fantastic rally. They're just a tiny little rally. Now what we're looking at is a very important moment, because the IBB is still down 12 at 297. And as a harbinger of a turn, I would probably say that if I saw the IBB suddenly go to -8, there's a real good chance that way you could get a rally in the E-minis and the NASDAQ of some kind of consequence. This is going to be a very important day. When I was doing all my work over the weekend, I looked at this chart here and I thought, when the MACD holds very well, but the price is failing and the stochastic is failing, what does it do? It gives you two readings, and they're in conflict, because the one says the green line, the faster moving average, called the 9-period differential, that differential is saying, hey, it's still showing some inner strength. All the rest, the price and the stochastic, slow stochastic, are showing, there's weakness there. On the one hand, it's saying, if this market was to drop, the Dow, if the Dow is to drop, the MACD has all this way to go before it even gets back to the levels that it was at, say, at the same price, let's say on the 4th of September. The stochastic is lower than that. So that's on the two hands are, one, you could deflect up. That would give you the bounce. That would give Scott his bounce that he's looking for Gilead. But it would have to be a very strong bounce. Why? Because at -223, so big deal, you go to -185, 173, that's still down very sharply. A bounce would be going to minus 150, -130, -97, -123, -76. That would be a bounce, because it's a bounce showing higher highs and higher lows. And then all of a sudden, you've got something that says the 9-period moving average at 16,313. That becomes a magnet to attract the price, but it's still too far away to even discuss it as a magnet. You really have to see the Dow at 16,180, over 100 points higher. That you really need to see that. So this is a very interesting period, because the chart formation says, look how many times you're testing these lows. The more you test it, the greater the chance that you're going to break down. I mean, you don't want to hang around here at this 15,970s to 16,010 area. And the low today is already 16,086. All right, I'll be back. Basil Chapman, Tiger Technicians Hour. Dow's down 215, S&P's down 33. We'll be right back.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. We're back. Dow's down 217. So this is very interesting. Over the weekend, I got sent a number of emails. One of them by Harry was very important. He said to go to this video that he sent of Richard Arms explaining his Arms index. I was fascinated by it because I haven't actually listened to it for a long time. You know what I always say, I take an index or whatever it is, technical tool, and before I know it, I've turned it into my own, and I kind of forgot what the original thing's all about. So it was a good refresher. But I was also fascinated by a number of aspects that he talked about when he was talking about not just the Arms index, he was talking about the market and a whole bunch of things. And he spoke about 16 to 17 year cycles, bull market cycles. He spoke about the different moving averages that he uses. And then he also spoke about certain sequences, and I had a chuckle because some of them were patterns that I use, the numbers that he used, and numbers that I use. But he never once discussed the numbers that he uses on these the Arms index. In fact, I should call it the Richard Arms, the Arms index, because he deserves credit for that. The Trin doesn't do him justice, the Arms index. That's the highs and the lows divided by the volume, the up and down volume. So what we're looking at here is in the Arms index, there are different calculations, but I use calculations differently in that I have numbers that I look at, and if it's over a certain and the fascinating thing to me was it was the exact opposite of what he said. I think he's looking out a little bit more intermediate term, but if he used the if you use the high reading as a reversal for the downside, I actually use it for the upside. And if he uses the very low reading for a reversal to the upside, I actually use it for the downside. I forgot all about that. So anyway, it was fascinating. So thank you, Harry, and many others. Yes, Berkshire Hathaway, I was asked about. See, Berkshire Hathaway is really worrying me because the Chapman Wave Roman candle in the monthly chart, what happened to my mouse? Oops, mouse, let's just grab, wrong mouse. That Chapman Wave Roman candle, we're already deep into that wick. So to me, it's just, we are going to test 125.50. The low of August the 24th is at 128.74, down only 90 cents right now. But that's what it looks like, and it's going to test that quicker than it'll test the 9-period moving average of 137. And look at the weak technicals. The daily says we've got that arch formation, and we should do some testing. Could have another bounce. Doesn't matter. Weekly chart says technicals are very poor, and that we definitely should break last week's low of 127.75. A close below 127.75, and boom, I think we can go real quickly to the 125.50 low of August the 24th. So that's that. And with the patterns that we're looking at, the question was with trend lines. Look, there's a trend line. I have a target of Berkshire Hathaway later in the year going towards the low bar of the 1st of February of 2014 at 108.12. That's another 20 points to go. Well, let's go one step at a time. The first step will be 124 to 122. And then if that starts to break, we start heading down towards the trend line. And that trend line actually is a trend line. It's the Chapman Wave inside track. So this will be the green line that I would normally put in that says it better hold here, because that's going to be the support level, because this becomes the red. A close below that trend line is very negative. Yeah, so Berkshire Hathaway, and this is very important, Berkshire is key to what many fund managers are holding and looking at. Okay, let's do this as we're about to wrap up. I'm going to, folks, Steve Rhodes, 1 o'clock. Dave White, 2 o'clock. Tom O'Brien, 3 to 5. Please stay tuned. I don't have to tell you. You know that these are very important programs. So now let's do this. VIX Index. VIX Index has gone to a leg C above the 2629 level, and the MACD is turning up, stochastics turning up, but the technicals are still not great. The price is moving higher. I would not be surprised if we actually did get a little bit of a bounce at any point within the next 1.5 sessions, but I have to tell you, the sell mode is definitely in place. So just keep that in mind, and there's nothing much to say.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.